So this is your first podcast.
Yeah, it is.
This whole time. You're the last one.
Excited to do it.
Yeah. So HiredUp Podcast. We have Jack Skaggs, the Chief Financial Officer. That's the official title, right?
I think that's the official title.
So I would say Jack is probably maybe the most important person in the company.
I don't know about that.
Aside from, the developers who actually make the app.
Yeah.
But I mean, that's a huge task, is all the financials, managing the money, making sure everything's squared away with the tax man.
Oh, yeah.
I mean, a lot of these, we've talked about this before, just around the office. Like a lot of these companies, they get these giant checks, right, and then they just go about spending it on all this luxury stuff.
Absolutely. And stuff that's really not just going to provide any value for them. They get that big check and it's like they get the $ eyes and they just want to go out there and,
looks
it's almost like
gram,
I've got it. Yeah, exactly.
Yeah.
I've got the money, so I've got to be spending it or else, I'm just wasting it.
Right.
If you can just, I think, project it out and make sure that you're going to be, a little bit more solid moving forward, then you can turn that into even more than, what you have.
Right. And so let's go back to the beginning. Like, tell me a little bit about just growing up, maybe about your parents, because I've done a few of these podcasts by now, and it's really a consistent theme for most people is the way that you grew up is influential to you probably more than anything else.
Absolutely.
So I'm curious about that because I really don't know that much about that part of you.
Yeah, so I grew up in Dallas, kind of born and raised. I moved out to Arizona for like 2 years, but I was really, really young, so I don't really remember it too much, just bits here and there. But I guess, I really loved sports when I was growing up. I was playing everything under the moon. There was one year, I think like 4th grade, where I was trying out for, club baseball, club soccer, club hockey team, and my parents made me choose one at that time because I was playing too many sports. So I settled on hockey. Yeah, of course, the most expensive one for them. But yeah, I kind of just ran with that. And, I was playing at a pretty competitive level when we were younger. And it's fun now because a lot of the guys I was playing with and guys I was playing against are starting to hit it big. So we got a couple guys that I played with that are D1 right now, a couple guys I played with that are in the NHL now. So they're all kind of, it's fun to see them. Mind you, I didn't quite make that jump, but it was a really good time. But yeah, I was really close with my family as well growing up, and I actually knew Evan as well. I used to go over every New Year's to his house and play poker with him and his nana.
Wow.
And that we have really, really fun memories of that. So,
how old were you guys when you first met?
Ooh, I've known him since I can remember, basically. We must have been 2 or 3 years old, and we were doing I think it was actually something sports related, actually, back in the day, if I remember correctly. It was like Mr. B's or something like that. And Evan, I've talked with Evan about it. It's funny because he said he hated the dude, but it was, it was just basically a place where a bunch of kids ran around like madmen. It was a really good time.
Right. Yeah. So what about, because you said you played a lot of different sports. What about hockey really just stood out to you as, okay, this is the one I really want to focus on?
Yeah, I think it really kind of comes down to the way that the locker room operates in hockey. So obviously, when you're comparing it to like a baseball or a soccer, this is kind of rudimentary, but the amount of time that it takes to get on your equipment. Like in soccer, what do? You strap on your cleats, you put on, you're out, you're ready. Baseball, you pop on your glove and you're ready. In hockey, you got your knee pads, your shin, your shoulder pads, skates. It takes like 15 to 30 minutes for a kid to get ready. And mind you, I was always one of the last kids to be getting ready, I think, just because I was too busy soaking up, talking with my buddies, and just kind of like, having that bonding moment where you can, everybody on the ice, they're one kind of person. Off the ice, they're another kind of person. But in the locker room, I feel like is where you kind of get to like their true selves, and everybody can just kind of speak freely. And, that's where you make, I think, your best friends in the world, or at least I did for myself. But yeah, and you even hear professional athletes who play for a long time, and then they decide to retire, and then
the question always comes up, what are you going to miss most about playing? And
Exactly.
almost all of them always say just the players, just my teammates, just being in that locker room, just building those bonds. And
yeah, I mean, it's your best friends really at the end of, especially for those professional guys, because that's who they're spending every waking moment with.
The most time with, and in a lot of cases more than their family.
Yeah, true.
For
yeah,
a
very
big
true.
part of their life. So yeah, that makes a lot of sense. What was your aside from that, like just about the game, like, were you always moving around? Did you have a certain position that you played?
So yeah, I was kind of one of the more of those like utility type guys. So I joke, I always kind of used to like barely make the team by the skin of my teeth, and the guy's like, oh, I'll just take him. I don't know where I'm gonna play him. And then I'd start on defense, and then slowly move towards offense, and then usually by the end of the year I'd be on like the power play or something. But over the years, it was a pretty 50-50 split between defense and offense. Mind you, when I was at Villanova, I played mostly forward. So recently, I feel like forward's kind of been on my mind.
Right,
I'd call myself probably a forward now, but if you asked me coming out of high school, I definitely would have called myself a defenseman.
So you're kind of like a Swiss Army knife.
Yeah, a little bit.
That's good.
A little bit.
That's a good thing. Yeah, those are probably the most influential players, right?
Yeah. Well, hopefully, I can take some of that Swiss Army knife into HiredUp. Try to help us in different places. So.
Absolutely. So let's kind of get into that. Was it something? Were your parents involved in finance growing up, or what was it that kind of drove you to that route?
Yeah, that's a great question. So no, not my parents weren't really involved in finance proper. They're both kind of business people. So my mom does like marketing basically for doctors, and then my dad was kind of more of the sales guy. Okay. But I don't know. There's something always about finance. I mean, even growing up, I didn't really know much about it, but it almost feels kind of like a game to me, I guess. And for me, that's just kind of, I'm always playing games and stuff. I love that competitiveness and, the ability to express that. And I think in the business world, where I felt the most natural fit for me was in finance, because, you have this kind of game that you're playing. There's a lot of different ways to play the game, but at the end of the day, you can always kind of look back to that number and be like, okay, well, how am I doing compared to, S&P 500? That's kind of a pretty standard benchmark that people like to mark themselves to. So it's, can I go generate some alpha out there? And, it's something that's super measurable. And, I know when I make mistakes, I know when I do things that are good, and I can continue to get better from that. Right.
Absolutely. Absolutely. So it's like, it's a very measurable sort of thing.
Exactly.
And you like that.
I do love the measurableness. As a finance guy, I'm sure most finance guys appreciate the
just like,
measurability.
Right. And it's something you can easily compare to other things. And
absolutely.
So is that what you majored in Villanova?
Yeah, I was a finance and psychology double major.
Okay, cool. And what happened after that? What were you involved in? After college,
yeah. So I interned with a company called Essilor. It's a great company. They make like eyeglass lenses and whatnot. And they do a lot of good out in the world. But I interned with them my junior summer, and then coming out senior year, I was thinking maybe trying to go into banking or something. But I don't know. I don't think I was really necessarily ready for something like that. I don't think I really understood enough about finance, because a lot of those guys that are doing that, we talked about how my family didn't necessarily have a finance background, but most of those guys, are born and bred finance guys. Their parents were investment bankers. They've been bred to be an investment banker since they're 5 years old, and that's just what they're gonna do, and they know that they've wanted that.
Pride and joy.
Exactly. Yeah. So so I ended up not going that route. Kind of went over to Essilor. It was a great company. Loved everybody I worked with. I'm really, really glad I did it, but I kind of just grew out of the role and got to a point where I didn't feel like I was learning that much. I didn't feel like I was really expanding anymore. And then so after about a year and a half of that, Evan approached me, and just I'd been doing some financial models on the side, just playing around with the stock market. I know a lot of people like to play trends and buzz, but I'm kind of a fundamentals guy. So when I'm looking at a stock, I like to go pull all their financials and project it in a model and stuff. So I've just been talking with him about that, and he said, hey, I'm thinking about starting a company. Do you think you might be able to do something like that for me, so I could project out and see what my cash is going to look like? I said, absolutely. So we did that, and then a couple months went by. We started talking about it more and more, and then we started going to investors, and I was helping him with that. And then it reached a point where it was like, hey man, if you want to come on and do this full time, then I would love to have you. And I knew enough about the business at that point. I'd been living in those models, so been pumping out those investor materials, and I thought it was the right move for me at the time, and that's kind of where we are now.
Right. So you were at your previous position for 2 years?
Yeah, about 2 years.
About 2 years. So that's a pretty big jump, especially, I mean, it's fascinating to me that you guys basically are lifelong, have known each other your entire life, and you're at a job where there's some comfortability there.
Right. Absolutely.
And then here comes an opportunity where it's risky.
For sure.
Talk about your, what was kind of going through your head as far as, I mean, obviously you knew the financials and everything.
Right.
You knew all the logical stuff.
Absolutely.
But I'm sure there was a part of you, there's a part of all of us that also doesn't think in logic,
Right. Yeah, exactly.
So, I mean, what kind of was going through your head before making that move?
I mean, logically, I think a lot of people would think it'd be, especially because COVID had just hit at that point, they would say, don't take that move. But, I was talking to a ton of people, and nobody was really actually telling me to do it. A lot of people were saying, wow, that's really risky. And then they wouldn't really say much other than that. And I was like, okay, well, come on, guys. I'm looking for a little guidance here. But, I just kind of sat with it, just kind of stewed on it and kind of tried to, I like to go back to the market here because I was talking about, trends. Like a lot of people, they get these trendy stock picks. So like a lot of people, when I realized what I was doing is basically getting the market buzz about like this job and saying, okay, do you think this is generally going to be a positive or a negative thing for my career? Instead of kind of going to everybody else, I just kind of internalized it and thought, okay, well, what do I think is right for me? What do I think my next step is? Because at the end of the day, it's my life that I'm living. I can't be relying on other people to be making my decisions for me.
Right.
I did look at all that type of stuff, but then, I kind of just looked at the HiredUp as a business. I said, well, do I believe that this is something that can actually work?
Right.
And at the end of the day, I think I really do believe that what we're doing here is going to be very successful. I think we're going to be, in a great spot moving forward. And that's kind of, I think, what really put the nail in the coffin for me to come here is like, okay, this is something I think I can really grow with and help it as it helps me as well. I think it kind of is some symbiotic growth. Sorry.
Yeah. I think you said something really important. And this is kind of a theme with Evan as well, is that, and with most people, right? They're always looking outward. They're always looking for that validation. Am I doing the right thing? Is this what my parents would approve of?
Absolutely.
Whether it's your job, whether it's your relationships, any big move. A lot of us constantly are looking for that outside validation. And when you weren't getting any sort of whichever way, it was more just like
really positive or negative,
right.
Really. I was just saying,
exactly.
That is an opportunity. And,
right.
left it at
So
that,
matter of fact, you looked within and you just were honest with yourself. And I think that's what we all have to do when it comes to every aspect of our life. Because like you said, it's your life.
Totally.
To me, it's kind of a catch-22 as well, because it's like we're constantly seeking approval, in so many areas. But when we try and please everybody,
exactly,
we tend to not really please anybody,
right,
including ourselves.
Of course. And that's honestly, at the end of the day, that's the most important thing. And, once I think you can make those decisions by yourself, it gives you kind of a mental clarity, just kind of like a peace with your decision-making process. And the decisions that you make, I think, end up kind of providing more for your happiness than, if you would have gone maybe you make the same decision, but if you're making it based on that validation, I think that it doesn't hold the same internal weight with, how that was a really good decision that I made versus, that was a really good decision that other people told me to make.
Right. And I also think that goes back to the market as well, right?
Yeah, everything always goes back to the market.
I mean, and I want to get into that.
It really does. It really does.
I want to get into that because it really is true. And, I myself have been, active in the stock market for about, it's like 3 or 4 years at this point.
Mm-hmm.
But you said something earlier. You didn't know that much about financials growing up,
Right.
but you wanted to.
Absolutely.
And that's how I kind of, for me, got into the stock market, because I was looking around. I had no friends who were involved. For me, it was weird because everyone was like, oh, I don't know how that works. I don't know what this. And the more I heard that, the more I'm like, wait a minute, no one knows how this works. This is really piquing my interest.
Right.
And then I started
Absolutely.
looking up, just facts and statistics, right? From what I gathered, it was like 90% of people in the United States are not involved in the stock market.
Right. Yeah. I think that's crazy.
And so that 10%, most of that 10% is involved passively. 401ks or some sort of fund.
Absolutely.
They just leave it and forget it.
Yeah. Someone else is managing that money entirely. Yeah.
Right. So then it's like, wait a minute, there's only like less than 10% of people actively trading in the stock market. And they're making all the dough.
Exactly, man.
So that really piqued my interest, and that's when I really started getting involved, and I started.
And that's a big risk for you as well, as somebody who doesn't know anything about it, to just start getting into that world. Like,
well, absolutely. Well, I mean, I want to know things that everyone thinks that they don't know, right?
Right.
For instance,
that are difficult. I mean, it's a challenge for yourself to try to.
Right. Like taxes. I'm like, wait a minute. I think this is complicated on purpose. So that we're just like, I don't know how it works. I'm just gonna do my tax act, or just let my tax guy take care of it. So that stuff like that piques my interest. So talk about how you just got involved personally in stocks, and what your general strategy is. I mean, you mentioned fundamentals, but just kind of talk about how you got involved in that.
Absolutely, yeah. So the very first time that I really kind of heard about and started playing with the stock market was my senior year of high school when I was at Cistercian. We started like a stock equity kind of club, and basically, everybody got a certain amount of money.
Real money?
No, fake money.
Okay,
fake
yeah.
money. Yeah. We should not be giving real money to high schoolers.
Right.
That would not be a good. I don't think that'd be a great idea.
Yeah,
but yeah,
trading.
so we're playing around with that, and I think that's kind of when it started to take hold of like, oh, this is really fun. And I think it was me and like my best buddy were kind of going 1-2. He ended up beating me out, of course, but he's not even. I mean, he's gonna be a teacher for finance now. So I think he's kind of past his prime of getting into the stock market and managing a ton of money. But then I went to Villanova, and up there's a big there's a heavy emphasis on like going to Wall Street and stuff. And I through the business school, I met a couple buddies who they're now all working financial professionals, and just kind of the day-to-day talk that they had, I think almost reminded me of that like hockey locker room talk, where you can just kind of talk freely about it, and just kind of generally understand what this guy's mentality is, what's he going into it with, because everybody kind of has their own mentality. But at Villanova in particular, they drill into your mindset the idea of value investing, because it over the last 100 years, it's been what's been working the best. And big guys like Warren Buffett or Benjamin Graham, like those are some big names in value investing, and they've proven that it does work. And they're basically saying, also kind of touching on what we talked about earlier, where they take stocks that the market is telling you are not worth a whole lot. So comparatively, if they have a price to earnings ratio of like under 15, then that's pretty low. I would expect like a technology stock, for example, to have like 50. So that's basically saying for each dollar that they bring in, I'm willing to pay $50. Right. So if you can find the companies where people are only willing to pay $10 to $15, but the company will be able to turn that into a lot more, then, well, you get a lot more of that pie. And yeah, I think that kind of has shaped my at least fundamental approach, because now I've gotten to the point where I'm not just looking at ratio, like PE ratios and whatnot like that. I can go to the SEC Edgar website, pull like income statements, balance sheets, come up with a 3-statement model, and then be able to project it out. And it's basically using the same data, and those PE ratios and stuff, that's kind of a snapshot. Right. But when I have more in-depth questions of like, okay, well, I see that they have a ton of debt. Well, what does that debt actually look like? Is it
Right.
is it good debt? Are they getting an asset for that debt? Is it, bad debt where, they're paying 8% and they're getting nothing on it? Have they not refinanced? I mean, right now with interest rates super low, I actually don't hate seeing a ton of debt on a company right now, because it could be, well, they just went out, they realized how low interest rates are. They're never going to be able to get a better rate. So more than ever, it's probably makes sense for them to be levered up. So, if they are going to go get a lot of debt right now because they know they can inject it into the business and go beat the return that they're having to pay on that debt, well, then I think that's some pretty good debt.
Yeah.
So I think getting to that next level has been kind of important for me. And it's always a process of learning. Like nobody knows everything about the stock market or,
If 2020 has anything to say about it, I would say so. Because that was a roller coaster ride I have never seen or witnessed in my life.
That was crazy.
That was absolute insanity.
I mean,
absolute insanity.
It took like a 30%, 40% bite of the market, and then by the end of the year, it's up again. It's just like, what is going on?
We ended
pretty significantally as well. It was like a good return in the grand scheme of things.
That wasn't just like a V recovery. That was like a check mark recovery. Yeah, but talk about that a little bit. Like, what was your because I had my own perspective, obviously, because I'm kind of a high volatility type of guy.
Right. Well, that's where the money is to be
right
made, for sure.
Well, it's where the money is to be lost as well, very quickly.
Very true.
A lot quicker.
Absolutely.
But kind of talk about what was going through your mind as a value investor, as someone who is really into fundamentals. Like, what was going through your mind over the course of this year, especially in the beginning, from like January to April, when this whole thing was crashing?
Well, I think originally when a lot of the news started coming out, people got really freaked out about, a giant demand side shock. And I think it was kind of a demand side shock, and that demand definitely altered. But I think originally, why it kind of tanked is people thought that demand was lost, that people were just not going to be spending money. Nobody had money to be spending.
Right.
When all these businesses were still mostly operating. I mean, it's kind of shifted to a more work from home environment, but it's not like the GDP of the United States was not taking a gigantic hit at the time. I don't think. I think it was really more of a demand shift from certain sectors that were really popular, like sporting events and things like that, a lot of entertainment related in-person businesses, or, a lot of restaurants and stuff. They were kind of all valued pretty highly. And then when this happened, it wasn't that money was no longer being spent. It was just being spent in different ways. So when we saw that giant downturn, it was like, oh my God, nothing's open. It's really hard to go spend our money. And then it's like, oh no, wait, well, people, like Corsair, which is, they develop like, computer parts or hardware manufacturer, that started tearing it up because people were like, well, I got all this time on my hands. I'm working from home, so I'm going to need a home office. Why don't I just build myself a computer? And so now, they've seen a lot of demand and they've seen a lot of growth since this. And
I mean, AMD,
that's another really big name. My buddy is huge on that name.
I bought AMD when it was like $10.
Good for you.
I'm just gonna keep. I mean, it's $10.
Yeah, exactly.
What do I have to lose?
Right.
So, but that had an insane year.
That is
as well as
off.
like Nvidia.
Absolutely, yeah.
As well, and
sure.
Nvidia was cool because they were always second to Intel, right?
Yeah.
And then Intel messed up their tiny processor that they were working on, and Nvidia basically swooped in and didn't have any sort of manufacturing issues or anything. So they kind of took hold, and then I think Apple discontinued their Intel partnership.
Yeah, I believe you're right.
Which was huge. So that was also very interesting. It's my dad was involved in the stocks a bit when I was growing up. Initially it didn't seem like they had any idea what they were doing.
Right.
Yeah. I remember one of the first big stocks that they got into, it was from, I don't know, some tip. I don't know if they were using a broker. I mean, an actual person.
Yeah, Jordan Belfort's calling them up.
Yeah. Well, it was like after the invasion in Iraq.
Oh, wow.
Basically, it was like cleanup time. and they invested in some sort of cleanup thing. I don't like nuclear waste cleanup sort of thing. So I mean, interesting. I'm like, okay, you know, maybe,
I could see it.
But the problem is that they had really no idea what the industry was like.
Right.
They had really not done their due diligence.
Mm-hmm.
And so for me, for most of my trading, which, you know, part of me is in the high volatility and part of me is in, you know, very conservative trading, right?
Right.
I like trading things that I understand.
Absolutely.
In industries that I understand. And we kind of talked about this before.
Yeah.
The two industries that I really understood and I was most active in was gold and natural gas.
Yeah. Oh, yeah. We've definitely talked about this.
Yeah. So, I mean, and those were two industries where I thought, okay, I can really do my research on this, and it's really not going to change that much. I understand the industry. I understand how it works. I understand the movement.
Absolutely.
And so what about you? What are, you know, are there some industries that you focus on more than others, or is it just company-based? How do you look at that?
Yeah, well, I mean, natural gas in particular, being a Texas boy, I definitely thought I was going to specialize in that. So when I was looking at these banking jobs, that was kind of one of the avenues I was pursuing of maybe being like an equity research guy for the oil and gas industry. So I worked a lot with those models and I loved them because they made a ton of sense to me. You know, it's basically, okay, well, companies got this much gas gas and, you know, oil that they have in their reserves, but they also have, you know, these giant basins where they can estimate pretty accurately how much they think is left. So, you know, they have like, you know, your expected versus, you know, so we think like 60%, we're 60% sure that we're going to have this much. So then, you know, in the model, you just take, okay, well, they think they're going to have this much. They're 60% sure. So we'll just, you know, take that number, multiply it by 0.6. And that's kind of, you know, what you put in their reserve. And then you basically say, well, they're not going to take any more out of the ground than that. And then you use the natural gas price that's in the market to just be like, you know, if they just sell that, how much are they going to be worth down the line? Because that is how much they have left to sell. And I think that was a nice entry for me to understand how the models operate. And now I'm kind of getting to the point where that's really cool, that's great, but it's still a very simplistic model. And now I want to get to some of the more complex models of, okay, well, how does it look now when I can change the price? What does that, you know, especially for, you know, now that we're company side with HiredUp, you know, what does our pricing look like? Can we generate more revenue by raising or lowering a price? And I think that, you know, when you start looking at like some scenario analysis and whatnot like that, it definitely gets a little bit more fun. And that's, I think, where as well a little bit more of the expertise kind of fits in, is guys can kind of understand and see that before they even start putting it into the model. And then their assumptions get really good. And then they have a model that's, you know, basically it's telling you where the stock is currently and where it's about to head.
Right.
So I've been trying to play around with some others that are still simplistic, like retail. I think is still fairly simplistic in that, you know, they manufacture clothes and then they're going to go sell them. And I'm just, I think, continuing my financial knowledge intake by trying to do that, and I'll continue, I think, to play around with retail a little bit. Mind you, that's a struggling industry for sure right now. So
Walmart did quite well this year.
This is true. But yeah, it's just, you know, it's all a learning process, and I've kind of gotten to that stage where I'm trying to figure out how to model some of the more complex things, and eventually, you know, I'll be able to work my way up to like a Procter & Gamble, which is just tons of different industries that they're involved in, tons of different product lines. If I can start getting to that stage where I can model something like that, I think I'll feel pretty good about finance.
Absolutely. So it's kind of funny that, you know, you have a less risky, more conservative approach, I would say.
For sure.
But you're involved career-wise in a bit more of a risky situation.
Absolutely.
So how did you, I mean, obviously you had your intuition and you followed it. But as a person who has that sort of mentality when it comes to stocks, how did you bring that over to deciding to do this full time?
Absolutely. Yeah, that's a great question. Part of value investing, it is supposed to be, it is a more conservative than the growth strategy. But at the end of the day, really what you're trying to do is separate what the market thinks about a stock as opposed to what you think about the stock. So you're basically saying you're looking at all of this, you screen based on what the market doesn't like, but then what you do is you go look at those individual companies, take the market completely out of it and say, okay, well, what do I actually think that this company is worth? And I think, when I did that with HiredUp, it was, I kind of gauged what everybody else was thinking. They all said it was pretty risky. And then I looked at myself, looked at the business. Is this something that I actually believe in? And then there was the third piece of, well, if I am going to take a risk, I am generally not generally not a big risk taker, but, I am still a really young kid, I think, in the grand scheme of things. At 24, if I am going to take a risk, now's kind of the time because you have all that time to recover in the future. So in the grand scheme of things, am I taking a risk? Probably, but it's also, a calculated risk in that I know if it doesn't really, if it comes up snake eyes, then I'm still going to have time to be able to, make myself okay in the long run.
Absolutely. And what were some of the things that you learned in your first job that you brought over to this position?
Yeah, I think, there was definitely an adjustment, I think, in my first job of entering the professional world, because in school, you're given a curriculum that you're supposed to study. You're going to get tested on that curriculum. So you kind of know exactly what's going to be on that test usually. You understand, okay, we're in algebra, I better go study some algebraic equations. But in the working world, I understand generally I'm in finance, but nobody's out there telling you exactly what's going to enter your plate every day, especially nowadays. Nobody's telling you, you're not graded on a particular curriculum aside from, are you getting your work done? And you go and talk with people, but at the end of the day, you kind of have to have that internal drive to go find the answer yourself, go find even the right questions yourself sometimes. So I think that was probably one of the most important things I learned at Essilor, and super, super applicable to HiredUp. Now in the startup life, I feel like half the time I have no idea what's going on. So most of the time I'm just trying to figure out what the right question is before I try to think about an answer. But I think that's been probably the most influential piece that I learned at Essilor.
Yeah, that's a great quote. And I really do think if more people were honest, especially in this world, they would be like, I have no idea what I'm doing.
Right.
It's like everyone pretends that they know exactly what they're doing and they have all the answers. Like, no, man, sometimes you're just kind of winging it in the dark and you're just hoping, you don't fall off a cliff or something.
Yeah, you're trying to figure it out. I mean, at the end of the day, all the people who have done something truly influential in the world, at some point they had no idea what they were doing because nobody had ever done it before. And so there was nowhere to look for an answer. They might have found the right question to ask, but they went and figured it out for themselves. And then, the ones who were really successful, they ended up making up their own answers and figuring out that it actually does work. So I think that's, I look to like Elon Musk as a guy who, I know Evan loves him, but I think he's one of those guys who's trying to do something really, really cutting edge. So he can't really go to anybody for the questions. I mean, the man was his own lead engineer, for crying out loud. If that doesn't tell you that he's making his own answers, I don't know what will.
And he was his own lead engineer because everyone just refused the job. Yeah. He was like, I would love to hire someone who actually knows more about this, but they just wouldn't do it.
Exactly.
They wouldn't want to take that risk.
They don't want to take the risk.
What's your opinions of Tesla as a stock?
Ooh, I love following it, but oh my God. I bought and held Tesla stock back in the day, back before I had like real money to play around with. And the constant volatility on it, actually... I mean, I knew, and I'd been told that there's a mental toll, and that's one of the most important costs, I think, in the stock market is the toll on your mental, and it was too much for me. So I had to sell out of it. But, I mean, I think if you look at Tesla not as a car company, but as an energy manufacturer, then the long run, it would be wildly undervalued. But, you know, if you're looking at it as a strictly car company, then I'd say it's probably a little bit overvalued just because there's a lot of buzz that comes along with it.
Right. Yeah. So I made and lost a lot of money on Tesla this year. It was fun. I enjoyed every moment.
Oh yeah, it's a blast.
And there's you know, these diehards that you're just following along with as well. So it's kind of like a community.
Absolutely.
But there was that one. I remember there was one Friday where I did not own a share of it at the particular time. But I also do options trading, by the way.
Oh yeah, okay.
So
So you really do like the volatility then.
So super, yeah. So part of me is super, you know, I just blue chips, you know, FANG,
Right.
you know, stuff that I understand. I'm just gonna leave it in there. And then the other side of me is like, with less money,
Right.
is like, you know,
I like that.
high
I
volatility.
like that.
You know?
That's a great approach because you kind of have your base that you know you're not really worried about, but then you give yourself that potential to kind of have something that explodes with you.
Right.
So I think that's the right way to do it.
And I had many explosions, in good and bad ways this year with that high volatility money. Yeah. But there was one Friday, I think it was sometime, I'm saying like June or July or something, and it's a quiet day. Actually, my girlfriend and I rented an Airbnb in Waco.
Oh, very nice.
Yeah, just kind of like get away.
Right, just
you
like
know,
a
because
little-
everyone was still cooped up and everything.
Kind of staycation type deal.
Exactly. And we were both working. It was that Friday, and we were both kind of working from home.
Right.
And all of a sudden, you know, I have Twitter on in the back. All of a sudden, a tweet from Elon Musk goes up.
Oh, yes.
And it says, Tesla stock too high, in my opinion. And it just goes out, and all of a sudden and so, like, you know, for those who don't understand options, you know, in layman's terms, you actually don't buy shares, you buy contracts.
Right.
And basically the contracts are like, you know, this stock will go up or down and within a certain time frame. That's the contract.
Right.
And you can only buy 100 contracts at a time.
Right. And you have the right but not the obligation to buy at that price. So
Correct, yes. And so you can buy calls and you can buy puts. And puts are you know, go down to sell, and calls are buy. And so I immediately buy puts. I'm like, oh my gosh, I don't know what's happening. Is the FCC going to shut down? I don't know. You know? And it just goes boom. And it recovered, by the way, obviously, within that day.
Through the roof.
Within that day, yeah. But yeah, anyway, so I mean, at the time though, I mean, at its lowest point, I think Tesla was like at like 300 or 400, and now it got so big.
Over 7 now, I think, right?
Yeah. Well, it had to. It broke up, right?
Did it? Oh, okay. Yeah.
Yeah.
You're right.
So it was well over 1,000. You know, and that's the thing that I would tell people, because you know they would look at Ford and GM and stuff. I'm like, wait a minute, this is like $8 a share. What's going on? But if you really understand Tesla, kind of like you said, it's not a car company. It's a technology company.
Absolutely.
It's an energy company that sells vehicles as its product.
Right, yeah.
They've
determined that
something.
cars as a good application for that energy
for
that they figured out how to
right.
create.
Yeah,
absolutely.
Exactly. So when you look at it that way, it's like, oh yeah, this makes total sense.
Yeah.
You know? And the thing with Tesla is, and a lot of people don't even really think about this, is they don't have one commercial. They do not, I mean, they don't really do any marketing whatsoever.
It's genius what they do. I mean, every once in a while, you're in the mall, you'll see like that Tesla thing, but that's really, I think, more for sales than it is for marketing. So
Right.
it's, I love what they do though, man. It is.
Well, there's people that love them, and then there's the people that just hate them. Just hate Elon. They hate the existence of Tesla and everything that, because you know, they don't understand it. And they're stuck in their old ways, and because they don't understand it, they just hate it.
Right.
They don't want to understand it. They're like, well, this isn't how this is done over here.
They almost refuse to understand it because it's different.
Oh, totally.
Yeah.
Totally. And I kind of see a similarity in this new crop of young investors that are coming out of the woodwork.
Yeah.
You know, for so long, people involved in the stock market, investments, all sorts of, I mean, they were, you know, usually 40s and up, right?
Absolutely.
It's
yeah,
like,
you had like
once you
business
start
experience.
Right. Or they're planning retirement
Yeah,
and all this stuff.
absolutely.
Okay. You know, I need to put some stuff away in here, you know. But now it's like there's this whole, and not only millennials, but Gen Z, right? The Zoomers
Yeah.
are super, I mean, they're getting involved 18. I know people, or I heard stories about people, they're like young, less than 18, which, by the way, is not legal, by the way. You need to be at least 18.
Technically, their parents
but
account.
But exactly.
Parents let them make the decisions.
The parents are letting them make decisions, and they're learning this at such a young age because they're obsessed with understanding this because they see the volatility and everything. And I know for me personally, once I started having some success in the stock market, my whole idea of how I thought about money and value completely changed.
Totally, yeah.
You know, there was one day this year even where this was the option side, by the way. So very, very volatile.
Right.
And again, I lost a lot and I made a lot. I ended up obviously with a profit, which was good. Right. And I decided to take a break.
That's all you can hope for at the end of the day. As long as you quit while you're ahead.
Yeah, exactly. But you know, I'm gonna get back in this. I kind of wanted to wait for the whole turning of the tide.
Well, yeah, there has been a lot of. I think the market would back you up with their volatility numbers or
so
with their volume.
I'm waiting
numbers,
a little bit for things to settle with that.
Exactly. I think everybody kind of is.
Yeah, but there was a day I remember where I'm talking like in an hour. I was playing either Amazon or Tesla calls. Some maybe NVIDIA, one of those.
Yeah.
And in an hour, I made what in my previous jobs would be considered 2 months worth of salary. In an hour. You know, and I'm not looking at myself as like a genius or anything. By the way,
no, right?
I'm just kind of sitting there with my jaw wide open.
Well, I mean, you clearly saw some value in the market though, and capitalized on it.
I had my due diligence, but at the same time, it's like sometimes you just get lucky.
Yeah, sometimes it's better to be lucky than it is to be good. To be honest, with you.
For sure. But especially that moment too, where it was like just seeing the comparison, and it just completely changed my. I mean, what is money? I don't understand. I mean, how do we create value? I don't understand it. You know,
it's almost like a relative thing when you think about it like that.
It is totally. Yeah. As far as how you grew up, and your parents, working hard, like what was kind of your mentality around money growing up?
Yeah, that's a really good question as well. I think when I was younger, I did kind of so my family was kind of upper middle class. Like we didn't really ever have to worry about money. So I think on some level, I just kind of took it for granted as like, I didn't really ever ask for money, but if I needed something, then money was just kind of there to go buy it. So. Right. When I went off to college, I think is where I really understood the value of money. I think that's where a lot of kids do as well, because my parents were very adamant about me not really getting an allowance. I didn't really have a job, so I had my meal plan, and that's kind of how I got my food. But by my senior year, I had some internships. I'd made a little bit of money, and then that dried up when I was buying food for no reason really. I mean, getting like Uber Eats when I'm a junior in college. Like, come on, man, just go to the store and pick it up or something. Yeah. But there was a point where I had no money in my bank account. I had a negative balance. I had no cash in my wallet, and I was just like, oh wow, so this is what it's like. I was relying on freshmen to swipe me into the spit, which is the freshman dorm meal. what's it called? The lunchroom, basically, for.
That's a loving term.
Yeah, it's the spit. Yeah, at Villanova, we've got the spit and the pit.
Oh,
and
okay.
spit actually stands for the South Pit.
Okay.
So.
Yeah. Not the food.
Not the food, which they may or may not spit in. But, just don't make them mad.
Right. Yeah, that's fascinating. Yeah, I had a story myself. So my dad put me to work when I was like, 15, 16.
Right.
I was like, okay, start working. He just that's just the mentality he had, right?
Right.
But I remember I was working. I was like 16 or something, so I was making, a little bit of money, minimum wage, doing stuff. And I wanted to take my mom out to lunch, because I have money. Let me do this. It makes you feel good, right?
Yeah, exactly.
And there's a moment where, okay, and I'm like, just get whatever you want. No big deal. This is great. And then I get the bill. And I look at it, and then I'm like, wait, tips not included? I'm like, what is this? And I look, and there's just that moment of, oh, this is what you guys have been doing this whole time, It was like that crash of reality. Oh, this is what it's worth.
It does cost money.
It's like, wait a minute. Or when I got my first paycheck and then there was all this stuff taken out. I'm like, what is it taken out for?
What do you mean I didn't make $20 for my hours work?
Right.
The government just stole half of it.
Yeah.
It's like, oh my gosh.
Exactly. So, yeah, the value of money, quite relative.
Very relative.
Yeah.
But, I think it's an important lesson for a lot of kids to learn. I'd be really interested, I think, to hear, because my brother kind of did something similar to you where he started working at 15, 16 for minimum wage jobs, but I was too busy playing hockey at that time, so I didn't really do anything. I didn't work until my freshman summer of college. Right. So that was the very first working experience I had. I'd be interested to see, kind of ask that question to him and compare it to, what my, experience has been with money.
I just think it's so, because I definitely know a lot of people who worked when they were young and everything, but it doesn't always necessarily mean, the value of a dollar, right?
Right.
But we aren't really, unless we seek this information out either through college or through our own Google searches or whatever, we aren't really taught about finance. We aren't really taught about how our money can be used to make money.
Right.
We're not taught about passive income. We're not taught about all the, investments and stuff, which is why so many people, the majority of the people, aren't involved in the stock market.
Right.
They just assume it's crazy. I don't know how this stuff works. I just see numbers and I freak out.
And there is the risk of losing it, but
sure.
I think you kind of miss out on the potential of gaining it, and also, just gaining the knowledge. I think, at the end of the day, if you're not wanting to understand something, then it just shows that, you're not as inquisitive as you probably should be about things.
Right. And again, there's risk in losing money inside or outside the stock market.
Absolutely.
And your buying habits and all this stuff, like you said, I'm just going to Uber Eat everything.
Right.
I'm just going to go out every night, and then you realize, oh wait, that $5 coffee I'm having every day, that latte,
probably not worth it.
Probably not worth it. It really adds up, right?
Yeah, especially when you're strapped for money. That's for sure.
Exactly. So I just think it's so important whether you're working as a teenager or not. I was telling Evan this before. I'm like, there really should be 3 or 4 college degrees. That's it. Everything else you can do with these 4 things. And it was like, I forgot what I said exactly. It's like sales, marketing, finance,
absolutely,
and I don't know what the fourth one I said is.
Some type of operations-y thing?
Yeah, maybe like business or something like that. Business in general. Because my whole opinion was, if you know all 3 or 4 of those things, you can apply that to every single area of your life.
Absolutely.
And, even as you said, we're young. We kind of have a bit of a leeway. We don't have families yet. We don't have, you have a mortgage, right?
Yeah.
So I mean, but we don't have children to worry about.
Right, yeah, exactly.
We don't have a whole lot of obligations.
We're totally in control of exactly what our expenses entail.
Right. So, why not? Why not take that risk? So
yeah.
And you can apply that if you do change your career, if you do these things, that will carry over to everything you do.
Absolutely. Yeah, that's a very good point. And, I think when you're thinking about changing those industries, I think a lot of people are kind of think about it in monetary terms, but I think the most successful people aren't even really thinking about the money. They understand something that they can apply to a business, be it sales, be it marketing. They're really just kind of, and I think you are this to a T, just kind of exploring their passions and what they really love to do. And then the money stuff it kind of figures itself out. If you really find what you're passionate about and you figure out how you can go apply that and, bring your passion on a daily basis, I mean, I think that will lead you to more success than focusing on, I need to go be successful, I need to go make a lot of money because I understand the value of $1. It's really more just, I'm just passionate about this, and then, let that take me where it be. If I need to take a risk to do something, that I'm passionate about, then take it.
And by the way, it's a risk. It's a bigger risk not doing what you're passionate about.
Absolutely.
And again, this isn't something, I appreciate that. It isn't something that I was always doing. I had to learn this over time because, for instance, I went to art school, right? I did the film production thing.
Absolutely.
My whole idea of my career when I'm a wide-eyed 17-year-old kid is I want to direct movies. I want to write movies. I want to do the Hollywood thing, right?
Absolutely.
So I finished college. I graduated a year early, and then I go out and move out to LA. And it was the mentality then, especially because LA and it's so expensive, right?
Yeah.
But it was the mentality thing. What once was simply a passion to tell cool stories, now shifted into how do I make money off of it?
Right.
Rather than I'm just going to keep doing what I'm passionate about.
I'm just going to keep telling some cool stories.
Exactly.
Right.
And that took the magic out of that for me.
Absolutely.
And it ended up, long story short, I ended up leaving LA and not wanting anything to do with, for a lot of different reasons, but that reason was the magic of that whole idea just completely withered.
Right. And you lost all your happiness that was tied up into what you actually really loved about it and what you're passionate about.
Exactly. And also, I also kind of got back to the core of why I wanted to do that in the first place, which was I want to tell stories. Right. And here's the thing, in 2020, you can do that in a lot of different ways.
Yeah. And
you don't have to be out in one specific area to do it.
No, you don't.
So, that was definitely something I had to learn the hard way. But, for what I recommend for everyone listening is exactly what you said. If you just, instead of worrying about the money, instead of worrying about this or that, just keep following your passion and everything else will figure itself out.
Exactly.
And I think for so many people too, their relationship with money is kind of what keeps them in a certain tax bracket, let's say.
Right. Yeah.
And I think, and what I tell people now, because this is something that I had to learn because, I grew up in an environment, my dad's always working 7 days a week, my mom's, kind of working paycheck to paycheck, know. Hard workers, but, strictly time for money mentality.
Right. Well, and there's kind of a safety in that as well. Yeah.
Sure. I mean, there's a safety in it, but, if that job goes away, you don't have any other forms of income.
Absolutely.
You don't have any passive income. You don't have multiple sources of income.
Right.
This is, again, stuff that you have to seek out and you're not necessarily taught. And so what I tell people, I'm just curious to get your opinion on this, is you need to treat money like you kind of said before, the guys that you knew, they weren't really focusing on how to make money, or they weren't focusing on the money. They were just doing their business, right?
Right. Yeah.
And so what I tell people now is really focus on your relationship with money like it's a relationship with a significant other, for instance. No one wants to be constantly chased all the time.
Right. Yeah. That's that's a great point.
You're always chasing money. You're always, it's like, oh, wait a minute. Like, yeah, you're kind of creepy. You're kind of a bit too needy.
Right.
I'm not going to come over and interact with you.
Right.
This may get too esoteric. I don't know. This is kind of how I think about it, But it's like, if
we don't mean this literally. That's
yeah. Well, yeah. I mean, it's also like, if I'm taking this hyperbole further, it's like appreciate the little things too,
Absolutely.
with something your significant other does. You don't always be like, can I have more of this? Can you do more? Can you be here more?
Can you give me more?
Can you give me more? Can you give me more? Instead of just appreciating.
Yeah, right. At it, yeah.
Who wants to be around that?
That's never gonna make you happy.
If you're being appreciated for the little things, hey, like I really love that I can afford this $5 coffee. Yeah. Or, I like, hey, I'm at the gas tank. This is really nice. I'm able to, or at the gas station, it's nice that I can fill up my gas tank,
Right, yeah.
You start appreciating the little things that money can do, it really kind of changes your mentality about it too.
Absolutely. As well. And I would kind of extend that even further and, kind of take it to, everybody has, friends who are a little bit tighter with their money and friends who are a little bit more generous with their money. And I'm kind of the mentality that what comes around goes around. So when you have, a great example for me was at college, and I told you I was broke, I had no money. Well, over the course of my years, I'd, gotten like Chipotle for one of my buddies. So then, when he knows that I don't have any money, he's like, hey man, you want to go over to Chipotle or Qdoba and I can pay for you. You got me that one time, I'll get you back this time. And then, it almost takes the stress out of having to find the money, and it creates almost just this base of like, oh, I have people that I can rely on, and it's not necessarily about the money, kind of like we're talking about. It's really more just about, having a shared experience and helping people, I guess.
Yeah, totally. What you put, I think of money now as just, instead of thinking of it as so physical, right? I think of it as it's a value exchange,
Exactly, yeah.
And that, how do you become successful? You provide a lot of value out there.
That's a great point.
And the more value that you provide for other people, the more that value will be returned in the form of money, right?
That's probably a more succinct way of saying
what I was
totally
trying to
get at there.
Yeah. But I completely agree with you. And, for everyone listening who may not know exactly what a CFO does, we probably should have talked about in the beginning, kind of the bullet points. We kind of hit a little bit here and there, but I would just love to give the audience just a little bit of an insight into, what's kind of like your daily routine like.
Absolutely, yeah. So daily routine, honestly, at a startup does look very different from day to day, but very generally what I do is, make sure all of our expenses are paid, make sure all of our revenues accounted for. And then when I say accounted for, that also obviously extends into the accounting branch of things. So, making sure we've got our income statement, our balance sheet, our cash flow statement in particular for a startup is probably the most important thing, to make sure that, we've got cash moving forward as well. Especially in the early days, trying to go fundraise, I think that's something where the CFO is very heavily involved, and especially, when you're going to talk to like VC or, guys who are going to be investors, they are really, really understand this finance thing. So they want to see all of your fundamentals. So I was definitely coming up with a lot of material like that, and a lot of it's kind of bled over. So, for example, I present on a weekly basis to Evan an altered kind of sources and uses thing, which is it basically works like a cash flow statement, where you say, okay, what are all the sources of money that we're getting and where is it all being used? And then basically, as the CFO, I'm trying to make sure that, for starters, that we have sources of money and that, our uses aren't exceeding our sources, but also that when we do go use that money, we're getting that value that you're talking about out of it. You're not just spending money willy-nilly when you get a big check. You want to be able to spend things in ways that will generate value. Maybe they don't necessarily bring money up front, but down the line, if you do things the right way, and you're spending your money appropriately, you do create value with that
right.
spend.
Good return on investment.
Exactly. Yeah.
Right. Absolutely.
So that's very generally, I think, what I do. Does that kind of make sense?
Yeah. No, that's awesome. I think that's great. Well, Jack, you're probably the quietest guy in the office, so I'm glad I got you on for the first time, and had you on for over an hour. So I mean,
oh wow,
yeah, it's probably the most we've ever talked with each other one-on-one.
Probably,
so,
actually,
I
sure.
really enjoyed this conversation. I enjoyed getting to know more about you, and hopefully we can have you back on the podcast as well, just to
absolutely
give some updates. And I would actually like to, do some updates with you once in a while about what's going on in the stock market and everything.
Yeah.
I think that could be beneficial for listeners, especially with both of our different mentalities and approaches when it comes to
I'd be more
those
than happy
things.
to. That'd be really fun to talk about. And thanks for having me.
Sweet. All right. Take care, guys. Thanks for listening.
Yeah, thanks.